Hey everyone, welcome back to another course member live stream. Today we've got a unique one because, well, it's on a Saturday. So let's get into kind of chatting about all things that you might have questions about. I know sort of the big questions that everyone has are always about the transitory versus not story of inflation, and I think the expectation here is that obviously we're going to be in a sort of high inflationary time for went a little blurry there for a lot longer than anyone expected. I still remember Jerome Powell suggesting, "Oh, it's going to be the base effects." And he wasn't wrong. The inflation that we saw around March, April, and May was a lot of it was just base effects comparing to deflation that we essentially had in early 2020. And then in the summer, things actually looked like inflation was actually inflecting down and things were actually going to go Jerome Powell's way. But I think the Delta variant and the supply crises really screwed that up. So kind of an interesting evolution when we look at it a little bit more granularly. But anywho, yeah, let's see here. It also looks like I accidentally made the stream public, which is kind of funny. So let me unlist it here. That's not intentional at all, but it's kind of funny. So, but anyway, I don't think that's funny. Yeah, anyway, this is usually supposed to be a course member live stream where I just answer course member questions and we just talk with course members about their questions. So kind of funny that I accidentally left that public. So I'm gonna unlist that. I just did. But anyway, welcome to, I guess, all the other people who are here. Let me do this. Oh, geez. If you're a course member, ask questions in just the general member section. Oops. Welcome to Saturday Oopsies. But anyway, yeah, I just going down that road of what we're talking about. It's so easy to make fun of Jerome. So easy to make fun of Jerome Powell because really, transitory implies short term, and to some degree, uh, things are not very well. I would say almost exclusively, things aren't very binary. Things aren't there is inflation or there is not inflation. Things are very much, hey, we have circumstances that have led to a lot of inflation at the beginning of the year. We have different circumstances that led to a lot of inflation at towards the end of the year. What we're seeing now, the first being the base effects. Then we were expecting reopening inflation, which is kind of potentially what we saw towards the end of the summer, maybe even earlier spring. And then now we're seeing supply shocks. So when you look at it, it's like we really had three things that created inflation, right? We had the base effects, then the reopening effects, then the supply chain constraints. I don't think anybody really expected the supply chain issues to last as long as they had. Oh, cool. Somebody made a Q&A thread. Oh, perfect. Jetta, thank you for that. Yeah, so there's a Q&A thread just for this live stream since I accidentally had this public for like a minute or two, which if you snuck in, whatever. Welcome aboard. Special Saturday live stream anyway. I'm feeling good. I got a nice cup of level 99 Slayer coffee here right now, so we just talk. So one of the questions coming up here is my thoughts on Disney. So I love Disney. I don't have a very large position in Disney. Let me pull it up. I really do like Disney, though. I certainly like Disney more than InsurTech, and this is because recently I've been going through the financials of InsurTech, and we talked about this a few days ago in the course member live stream that InsurTech really is riding off a 2020 strong advertising campaign. And that was probably accelerated by the pandemic, but also by the fact that, for example, a company like Lemonade IPO'd. So I do think there are some downsides to InsurTech that were a little misleading that didn't show up in sort of marketing aspects or the disclosures, the financial reporting of companies like Lemonade or Hippo. And some of that has to do with reinsurance, some of it has to do with advertising. But I think more back to the original question with Disney. So I've got about 0.5% of my portfolio in Disney. I really like Disney. I think it's a company that is, to me, like an Apple, Amazon, Google. Google, honestly, is probably some of the most phenomenal growth out of all of them with YouTube. But all four of these, I would almost say, are, and because I frequently said like Amazon, Apple, Google are kind of like my base. All four of them, in my opinion, I would kind of categorize similarly, that they kind of make a base tech/growth portfolio, but I don't want them to be my entire portfolio because I do think they'll have less growth than other companies, whether that's something wild like Nvidia, which I think is a little overstretched right now, or something like Tesla. So Lucid earnings. Any thoughts? And did I cancel my Lucid? So I put in my, if you can't use the thread for some reason, just do general members. I'm going back and forth. I did cancel my Lucid, or at least I put in a request to cancel it. I don't know if they actually officially did cancel it. I am not, I just don't need a car is one of the problems. It's probably the main problem. And that's sort of changed over the last, I don't know, probably 6 months. I have very, very little need for a car. I hate cars. Cars are maintenance and problems come up. Batteries need charged and plugged in, and batteries degrade. It's just a pain in the butt. Like, I've got the Tesla Roadster, and my dad was using it for like 6 months, but he told me after 6 months, he's like, oh yeah, I was really good with it. I'd only charge it to like 50%. And I'm like, Dad, no, you're gonna kill the other half of the battery. Sure enough, the other half of the battery's dead. So yeah. I just don't like things, honestly. I want less stuff. Like, even though I was sitting here surrounded by all this junk, every day I think to myself, I just want to dump more stuff and have less stuff. So I think the last thing I want is another car. Did you sell some of your stocks at a loss as part of that? Okay, yeah. So recently, I closed. So here's the thing, I have a sold put on Tesla. That unfortunately I sold the day before Elon's announcement that he was going to sell stocks. That would have been impossible to predict, and it was very, very unfortunate timing. With that said, it was a sold put, so I did get a credit that kind of buffered me buying Tesla shares. But I had to buy $1.2 million of Tesla shares, which I should have been assigned on Friday. I don't know why Webull hasn't updated, but my expectation is I'll be fully assigned on Monday, and then I'll be buying $1.2 million of Tesla stock. So I thought, okay, well, what do I rather have? Do I want to just take that Tesla stock and dump the Tesla stock right when I get assigned to it and sell it back, or would I rather keep the Tesla during this Elon sell-off drama and get rid of some companies that I have like teeny tiny positions in, and that was really just like, it was almost kind of, I felt like it was like spring cleaning, going through my portfolio and like, why do I have 15,000 here? Why do I have 20,000 here? Why do I have 15,000 here? And it was crazy. By the time I went through and did the spring cleaning, it added up to like 500K, and I'm thinking to myself, wow, $500,000, like that's a really good position that I could have in something I really believe in. Yeah. That's yeah, that was my thought there. Somebody says, can we look at the Disney chart? Yeah, sure. But yeah, again, I really like Disney. I also think what they're doing is very, very smart. And sorry, the questions are all over the place right now. That's usually not the case, because usually I don't accidentally make the course member live stream public. So it's just kind of funny. But anyway, yeah, so going back to Disney and what we've talked about with Disney, I really think is something that you do have to be careful of, though, because you have a lot of people, I think, going into Disney as a reopening play. But the problem is the reopening is kind of over right now, right? And so I think that's why you kind of have this reopening surge that you've had here from November, which makes sense when the vaccines were approved. This is really your tell that it's a COVID play style stock, right? And we've been watching this trend for a while. I mean, since honestly June, when we probably drew this line, we've been watching this trend, and really we've kind of continued down this path. So yeah, I my expectation is just all recovery stocks. So you look at even Cheesecake Factory, right? Are probably having a little bit more or struggling a little bit more. Let's see, Nordstrom. Yeah, you can kind of. I mean, it's this one's doing a little better, but you still see some struggling. Walgreens, Boot Alliance. Yeah, same thing. I mean, just certainly not. I mean, a little. It's certainly been notched down a little bit, right? All right. So, what's another question we've got here? Thoughts on 2024 PayPal calls? And is Chase not allowing customers to apply for a HELOC a concern? No, not on Chase. The banks have pretty much killed all HELOCs during the pandemic. It was just a way for them to preserve liquidity. And they've sadly kept it that way, which I thought was I think is very silly. But I also wouldn't go to my bank for HELOC. I would go to a credit union. I think that's going to be a lot better for you. So, but let's look at PayPal. So PayPal options right now. PayPal is obviously a bit here in the toilet. I think it's substantially oversold. Not just relative strength wise, but just in general. So what I consider a call on PayPal. I mean, volatility is a little extended right now. I'd like to see volatility come down, and then even if PayPal's up a little bit, like PayPal's at 220, I'd probably like it a little bit better if the volatility came down substantially. Right now, but then again, right now for a December call, you're paying $7.60. It's not terrible, 6-ish%. If I went out to Jan 2024, and if I went for something like $200, you'd be paying $46 for it. I mean, that's a lot. But do we think that PayPal is going to be above 246 with higher volatility potentially, or at least the same volatility in the future? Well, I don't know. The volatility part, maybe not. But I do think pricing wise, I can't imagine PayPal not being above 246 then. But then again, you never know. Could have a little market crash around that time. So it's always kind of funny with calls. When would you nibble and buy heavy for NVIDIA? Yeah, I'll know that when and then I'll update the spreadsheet with that too. When I finish going through their earnings call, which not just their earnings call, but also their annual report. Their annual report, like if you ever want to read a book that's really interesting, that's a good one. No, I really need to get back to paying Lauren $10 for the minute. This is something that we did for a very long period of time, and I've been kind of bad about that lately. All right, so let's see here. Did the Chinese real estate company which yeah, Evergrande? I don't know what the latest was on that. I thought they made a payment. There was there were dueling articles that day. It was a couple days ago that Evergrande was going bankrupt on one hand, and then they were defaulting, and then on the other hand that they weren't. It was quite odd to me. I thought, all right, will Google ever spin off YouTube? I think that would be a mistake, because Google, is really trying to capture YouTube as a place where people can put their ads. I think they're too linked. Remember, Google's an advertising company and a search engine company, and that's literally what YouTube is. So I don't know about that. Lucid earnings coming up. I personally don't think that Lucid earnings are going to be that great. And that's specifically because I think vehicle deliveries are going to be expected to be a lot higher than they will be. And their company margins are going to look pretty bad. Any worries about the reemergence of stagflation? No, I have very little concerns with that. But then again, I'm also 50-ish% exposed to real estate. Actually, less now. I'm like 33% exposed to real estate. Geez, how much am I? I don't even know now. That's really interesting. Yeah, because real estate is a form of an inflationary hedge, right? Because as rents go up, it's easier for you to pay your debt off. Of course, as inflation goes up, interest rates could go up, which could affect the market value of your property. But if you're not selling, that market value doesn't matter. And paying off the debt is actually what matters more. So if I divide portfolio by real estate, including the debt, just to know total asset number divided by total. Oh, sorry. The way I should do this is actually stocks, crypto. We'll do that. We'll do stocks, options, crypto, stocks, options, crypto, and these other assets, which are mostly stocks or private equity. And then we'll add together real estate. So that's the portfolio size, not the net worth calc. Add those together, and then real estate divided by, let's see what we got. Real estate divided by 41% real estate. Haha. Okay. So 41% real estate. Yeah, I still have Hippo call options. I'm going to be owning some Hippo shares soon. Because I bought them well in the money. I bought them at $4. But yeah, anyway. Okay, so we talked about InsurTech. Pins, I do not have high conviction. And no, I do not have very high conviction at all, sadly, in Pinterest. And we saw this, unfortunately, at the same time as Peloton started declining. We started watching the trends for Pinterest decline. Unfortunately, those trends have not been improving. And the stock has not really had a moment of recovery either. So that's unfortunate. Is anyone picking up Shift? Yeah, Shift is something else that's quite strange. Very, very strong beat, but it was almost like people took advantage of the beat and sold out during the beat. It was quite odd. But yeah, unfortunately, Shift, just the smaller companies, you look at the Honest Company, you look at Shift, or you look at some of these smaller companies, Smile Direct, just absolutely brutal destruction. It's like a lot of money in this new market that we're in is very concentrated. Diversity in investing is somewhat nominal. You have Wall Street bets where people run around chasing the latest fad. You have long-term fundamental plays that are almost always popular in social media and just in probably the millennial age group, plus or minus. And those are, of course, companies like Tesla, I would imagine to some extent Google, Amazon, Apple, and then maybe some of the car companies, whether that's Lucid or certainly SoFi. But yeah, surprisingly, a lot of people's money is I think the internet has helped more recently, I should say, not the internet. Social media has really helped concentrate where people are investing. So it's kind of interesting. Yeah, a very, very little diversity of stock, and I think that's why some of the small companies, they really suffer. And people look at the charts of the small companies going down, and they're like, yeah, no, I don't want to invest in that, even though it could be a good company or good deal. People like when they look at a chart and they see the chart going like up because they feel safer investing in it. It's the psychology of money, right? Which is a horrible way to invest, but it's also a very common way to invest. I honestly do not think that Biden will use marijuana legalization as a Hail Mary to save his presidency, which means weed stocks might blow up. I do not think at all that weed legalization is going to be a federal topic of discussion, quite frankly, anytime within the next potential 2 to 3 years. The rest of Biden's term, I don't think so. I mean, it's certainly not before the 2022 election. I think it's going to be too risque right before an election, but without a doubt. So, although cannabis has had a really good move recently, and that's because of Sundial. Sundial did very, very well. So you saw a big Sundial pump there. And Biden has enough problems. Biden's got a lot of problems. That's true. Realty Income. I don't know anything about them. Let me see. Isn't that one of the REITs? Realty Income. Closes merger with VE REIT. Yeah, I don't know any, but honestly, zero clue. Your thoughts on the odds of an abrupt interest rate hike from the Fed to stop inflation and causing a large pullback? Low. As long as there's J Powell, low. I would say under 5%. Do you expect the market to drop if Biden nominates Brainard for Fed chair Monday? Yes, I do. In fact, it wasn't just Brainard, it was also Daly. Daly was offered an interview by the White House for, I think, a permanent board member seat, and she declined. I thought that was very interesting. So the White House is they're shopping, and I think that could end up being problematic for the market if we get a shift, some sort of shift. So that'll be something to really pay attention to and be watchful of. Kevin, does buying on Coinbase and transferring to say Voyager make sense with gas fees? I'm asking because I know you did much before. Yeah, I believed so. And the reason for that is the fees to transfer were actually not that high with Coinbase. I don't have all that written down right now, but I'll look right now. So let's try it. Let's just do an example together. Let's see if I can. Although I don't know. No, I should have. Hold on. What do we have here? So if I take, do I have any Ethereum? No, I don't have any Ethereum in Coinbase right now, but let's try Bitcoin. So if I withdraw, and I withdraw 1 Bitcoin, the fee for withdrawing doesn't actually even show. It's just network fees 0. I wonder if I took the wallet address in first. I'll try. Okay, hold on a sec. Usually the transfer fees are super nominal, especially compared to the wide spreads. Like right now on Voyager, if I were to buy Voyager, let's see here, Coin Market Cap. So right now, Coin Market Cap shows Bitcoin at 64,333. And if I were to buy it on Voyager, I would be spending 64,560. So I'm literally paying $400 of a premium per Bitcoin at Voyager. 64,559. That works out to about just about 0.6%. It's a lot. Now, if I send, it's a good question though. Let's see here. If I now transfer Bitcoin, let's try that. Bitcoin portfolio, Bitcoin transfer. Okay, now I have transfers not supported. Okay, that's very odd. Why? Ethereum. I can transfer Ethereum now, but no more Bitcoin? Seriously? What happened, Voyager? Transfers are currently not supported for Bitcoin. That's sus. Why all of a sudden can I no longer transfer my Bitcoin? That also, by the way, means I can't get my Bitcoin out of Voyager right now. That's quite odd. Does anybody know why all of a sudden Bitcoin would not be supported for transfers? Very strange. Yeah, I don't like that. Okay, well, I'll have to explore this a little bit later. But again, I don't believe the network fees are very, very large. Yeah. I'm looking at the fees, though, that they list here. One sec. Trying to see if they have a transfer fee. Withdrawal fees. Here we go. No, those are just USD fees. Never mind. I'll have to figure that out later. It's a very good question, but I also do think it's weird. Voyager has some maintenance going on right now, which transfers for Bitcoin are turned off at the moment. Ah, okay. Gotcha. Thank you. All right. So what other questions do we have? I know the questions are a little all over the place here today, but anyway, trying my best. After the recent Owlet uptrend, do you think keep it or dump? Well, I think Owlet will do very well once they essentially get their FDA clearance. That's what you're waiting for. Now, unfortunately, I don't like investing in interesting Taproot update. Thank you. That would make sense. Okay. Okay. Yeah. Here, boy. Okay. BTC transfers are currently paused due to the Taproot update. Ah, good. Okay. That's fair. Thank you for that. I'm sure there was a reason. Like, I don't think all of a sudden I'm going to stop transfers out. But that's good. All right. So, but yeah. Okay. Back to Owlet. I generally don't like investing in anything that relies on FDA approval because it's just a total crapshoot. But I do think Owlet's going to be okay. So I'm optimistic about Owlet. I like Owlet. I think it's a great company, but yeah, it's something that I'm not extremely heavy in. I am interested in potentially trading it, but right now I only have a sold put on it. So we'll keep an eye on it. I want to buy my home and rent out my house. I'm currently living to become a rental. I have about 90K equity in this house. I was thinking about taking out a HELOC and using that to buy another house. Which way you think is the best way to buy another property and expand my portfolio? Okay. So if you want to buy another place that you're currently living in and rent out your current home, then what I would do, you could take out a HELOC. That you would have to do that while you're still there, right? So what you do is you take out a home and equity line of credit while you're still living at your place, and you're not looking for a rental yet. Because technically, if while you're in the HELOC application stages, you're looking for another property, they're going to want to qualify that debt, and you're not going to qualify maybe. So this is where most people will establish their home equity line of credit while they're still living in the home, while they plan to still live there, for a year or for whatever period of time. And you have to check what your HELOC agreements say. But I've done this before where I got a HELOC, and once you have it, I actually personally I used the money to buy a rental property and not move into it. I just bought a rental property straight out because the HELOC gave us the 25% down. But what some people do is they'll establish the HELOC, they continue living in their house, then they find a good deal or they find a reason to move, they find a new house they want to move into, then they write a check from their HELOC and buy a new house. I think it's a great idea. I really like the idea. I do think that's great. Just don't get a credit line and go buy something stupid like a boat. That would be bad. That I would not agree with. So let's see here. Yeah, the Taproot upgrades. I mean, this makes a lot of sense. Block 709-632. First major upgrade since 2017. That's very exciting. Yeah, well, that's gonna be huge. So we'll see how it goes through. Okay, we'll come back to or we'll talk about Bitcoin a different time. They might be able to bring smart contract. We'll see if it actually ends up being functional. But anyway, so what do I think about draft? Okay, so I get asked about DraftKings like every single course member live stream that we do, and I think I just need to do like a frequently asked question on it. In fact, that's what we're gonna do because we have a section for FAQs. It's been somewhat convenient, and then I could just reference the timestamp to this video. Okay, copy link. And we're gonna go course member live stream FAQ. DraftKings at 2840. Okay, so here's the scoop with the gambling sector. The gambling sector had a lot of enthusiasm that went into it during the pandemic because there were so many people staying at home. To some degree, there is an expected drawdown in valuations in these companies because people are no longer solely stuck at home. Less people are working from home as well. Remember during the pandemic, during the pandemic, at some point, all of us were at home. But we were regularly at 20 to 30% people working remote on government statistics. Now we're somewhere at like 10 or 11%. It's substantially fallen. I do believe that you could continue to have some risk for various different iGambling stocks because of the essential drawdown out of COVID stocks. With potentially no winter wave this season, I think you're going to see pain at companies like the vaccine companies, Zoom, DocuSign, the stay-at-home stocks, and the gambling stocks are part of that. You do also have licensing issues with the gambling stocks, and there's been some recent drama about licensing potentially. Well, one particular license got denied, and without going down the rabbit hole of all the licensing, it's not something that I think all states are 100% ready for yet. I do think they should be. I personally think we should have just fully legalized gambling, and our government should actually help provide the proper mental health services for whether it's gambling or for other people. But I think we're still a while away from fully legalized gambling, and the state of our legislature today is not very, whether it's states or federal government, not very optimistic, I think, or shouldn't leave us very optimistic about them actually being able to get things done on things like cannabis or gambling. So you've got regulatory concerns, you've got the stay-at-home concerns, you've got some folks complaining about valuation concerns, although that seems to be less, to me, the larger issue. I think it's the other issues I'm talking about. And so they are not things that I've been very enthusiastic about trying to go deep on and get in on. I think you could potentially have some excitement over, especially if you have sports betting apps that let you bet on certain things, so leading up to like a Super Bowl. But for example, I tried DraftKings, and they wouldn't let me bet because I'm in California, and it's like that's a big portion of your potential user base that you're not able to get to, and so regulation just sucks. But all those things together make me less optimistic to even go down the rabbit hole of doing a deep dive research set on iGambling. So hopefully that kind of puts to bed my thoughts on that, because I've now thoroughly explained where my head is on that. All right. So what other questions do we have? Let's see here. Do you think I should take some profits if I think the market will correct soon, or rather stay invested? No margin long term. Yeah, I recommend you stay invested. And I shouldn't say I recommend you stay invested, because that sounds like financial advice. Let me rephrase that, because it's not supposed to be financial advice for you. If I were in your shoes, not financial advice for you, I would not try to sell out. Instead, I would take new money that I'm making and I would send it to my brokerage account and have that cash ready to buy. So that way, I maintain my longs. I don't have tax implications from trying to, trade my longs. And then I have new money that I'm building up, like a little bit of a war chest, and I'm letting that build up. Then in certain circumstances, if certain stocks are just running wild, sometimes it makes sense to take a little bit off the top, but not always. Generally, I think it only makes sense when you are trying to get out of margin. But otherwise, I'm not so enthusiastic. Best way to buy an investment home with 1099 income, realtor. Well, I would say the best way for you to do that is to find a broker that lets you do 1 year of income with tax returns, and then 1 year to date. But then also watch the lectures that we have in the investing course about the depreciation trick for self-employed people. That's really understated, and I think it's really a good opportunity for people to use on just everything that they're buying. But not a lot of people use it. Really surprised by that. I think because you have a lot of CPAs that push full write-off, and you can really take advantage of some good tricks. So let's see. Another question here we have. YouTube question. How can I get more subscribers? Well, I mean, whole course on that. But the big thing is you've really got to watch the trends and then inject yourself into that conversation. So talk about Taproot right now. Talk about Sundial, 2 weeks ago. Talk about Tesla now and last week, and Elon Musk. If you're not talking about what other people are talking about, unfortunately, it's very difficult to grow on YouTube, and growth can be very slow and painful, which is unfortunate, but this is also the way it is. Yeah, UA 650, Brad, you're right. Shift and Hippo are stocks that, well, more Shift, where the stock price and the valuation does not reflect the potential for growth that they have. I think that's unfortunate because I really like. I think both of them are great companies. I think they've got great people working there. I live in the UK and have 2 properties with cash to pay one off, charged on all income, and I'm unable to claim back the interest due to a change in law. Would you use the cash to fully pay off one or invest? Bear in mind, my taxes through the roof. Essentially, I will be paying tax on the profits I don't make. Yeah, right. So I might be losing a little bit in translation here because I'm unfamiliar with your tax structures. But to me, it sounds like you have a bunch of cash that you're getting and you're going to be paying taxes on a chunk of it. And so you're wondering, should you use the rest after taxes to buy or to pay off one of your properties, or should you invest? It depends what stage of life you're in, right? We talk about this in the lectures as well. Yeah, I don't know what you mean. I'm currently paying tax on profits I don't make. Like that doesn't compute in America. But I also don't know how that relates to your question. But I think the bottom line of your question is, should you invest or should you pay off a property? It depends what part of life you're in, right? If you're getting closer to retirement, you want to retire, you want to lower your monthly expenses, you want to have more passive income soon, then maybe it does make sense to pay off a rental property. If you're okay, so you mentioned you're 40 years old, starting late. Starting late. So starting late implies that you're trying to grow your wealth for the next 20, 30 years. If I was trying to grow my wealth for the next 20, 30 years, the last thing I would do, personally, not financial advice for you, but for me, the last thing I would personally do is pay off property. So I think it's a very bad use of capital. YouTube question. Oh, getting over camera shyness. I know I don't have to, but try to face a huge plus. Yeah. Look, when you're brand new with YouTube, the beautiful thing is not that many people are watching. You know? So like, just get your face out there. Just post your videos. Thoughts on T-Mobile for defensive value play? So I don't like things that are commoditized. I think that cell phone service, actual commodities like lithium, aluminum, lumber. I think that anything, solar panels, I think anything that's a commodity will, by default, always come down in price. And the cost to maintain a higher price will always increase. So it will always be more expensive to provide for a product that's making you less money. I think it's a terrible business to be in. So I am not interested in commoditized services or commodities because of that. So you think it's too early to get into 5G stocks? Well, no. I mean, I think getting into 5G stocks is something you could have done a while ago with Qualcomm, Apple. I'm not. I'm okay with those. I don't think those are as commoditized. By no means would you ever call Apple commoditized. Qualcomm is replaceable, but I don't think they're a commodity either by any means. I think they have very unique and high quality products. I still want to stop the bullshit. That's awesome. All right. So my outlook for Rivian. I really want to do an updated video on that. I'll do that because I'm not optimistic. Now, I did say in my Rivian video that I did think there was a very good chance it could run because we're in an EV kind of super cycle right now, which is exactly what it's doing. That's what I suspected. But I still think the valuation is sitting on toothpicks, destined to come down substantially. When are you going to enjoy your money and buy yourself a boat? Speaking of boats, what happened to the Dockholm? I've thought about buying a boat, but I generally very quickly kill that thought because I don't like maintenance and I don't like doing things. Probably rather rent a boat. And my dock home is still waiting for the city. The city is so overwhelmed right now that permits that should take you 6 weeks are literally taking 6 to 9 months. It's cancerous. I highly encourage, if you ever think that you want to get into development, or you want to invite the city into your home because you want to do the right thing, I highly discourage that. I, under all circumstances, highly encourage you to stay away from the city as best as possible. Yeah, because it's pretty toxic. Speaking of which, I want to get an update here. Let's see here. Okay, here we go. Yeah, anyway. Any thoughts on the Sono? Okay, Sono Group, which is yet to IPO, an EV maker which recharges itself using solar power. I think that's a horrible idea. Solar power is dead slow, dead slow. I mean, you generally calculate solar power at, a strong panel today is 400-watt panel, like a 405. That's a strong panel. You get about 4.5 hours is generally how you run the calculation for average power for a solar panel. So that works out to what, 1.8 kilowatts? Come on, man. I'm gonna need like weeks to charge the freaking car. It's just not feasible. That's insane. I mean, I'd have to look at what their claims are, but I have massive doubts. I mean, you'd have to be rolling around the street with like 40 solar panels to make that make sense. The tech is just not there yet. If Webull IPOs, will you invest? Probably not. I'm not terribly enthused about investing in brokerages after Robinhood because they all kind of suck. They all have their problems. How realistic will the metaverse be? If Matterport is as real as it gets for house tours, but Meta is just another GTA V open world creation, will non-gamers buy into it? Yeah, I think that the way I like looking at the metaverse is not from a gamer perspective, but from a utility perspective. So, for example, if I'm going to, we've talked about this before, but if I'm going to, invite an appraiser over to my house, honestly, I'd rather be able, and I imagine the appraiser would rather be able to just, click like put on a headset and then me be able to walk around the house with them with the headsets on. I don't know exactly how that would work yet. But I think that would be much cooler than actually having to invite someone physically over. I mean, think about how many more appraisals an appraiser could do if they didn't have to drive anywhere. It'd basically be like teleporting to different houses to appraise. I think it's very cool. Those are sorts of like the real world practical applications. Aptera has a solar panel car, great company, 40 miles of charging per day. Yeah. Well, I mean, I see the questions everywhere. No, you can't divert short-term capital gains by buying a house. You can reap other tax benefits by buying a house. The only way you could not have, I mean, that I'm aware of, and talk to a CPA, obviously, by not paying taxes would be if you 1031 into a rental property. Like-kind exchange is what they're known as. Okay, which order am I going at with questions? There's no order. There's no order today. Nope, don't know anything about Brookfield Renewables. Would you mind doing a fundamental analysis of Tenet FinTech, PKKFF? What? That sounds very familiar, but I don't know anything about it. Maybe can you? What's your like thesis on it? How much do you think it'll grow? Why do you think it'll grow? Why is it unique? What's its unique selling proposition? And some of these other things. I don't know where in the EU you can buy options. Maybe eToro, but I don't know the answer to that. Microvision. I really think that Microvision should be bought up by Tesla. So Tesla has forward-facing LiDAR. But I don't think Elon will ever do it. Elon's very stubborn, and I appreciate that. I think it's wrong, but that's okay. We can have different opinions. Taiwan, yeah, I've looked into Taiwan semiconductors a lot. I just haven't been able to get convinced to buy them. Does cancel culture scare you? I'm worried a little tongue slip on camera and never get a job. Oh, not really. I'm a big fan. I like cancel culture. But I think you're always going to have criticism or haters to some extent, and the vast majority of them are not worth being concerned about even remotely. So I'm generally not worried about it. And hey, if you're worried about it, then just don't go live. Do recorded videos. Interactive Brokers does options trading in the UK. Okay, well there you go. Yeah, we talked about PaySafe yesterday. Check out my video on the course member live stream yesterday on PaySafe. Okay, let's do a few more questions. Woo! Would I be willing to get an Elon Musk Neuralink brain chip if it meant full integration into the metaverse? I mean, I imagine if there's a way to like go back and forth, like, okay, I'm gonna leave the metaverse now, go home, go back to normal, and a million other people tried it before me, and it was safe. I wasn't gonna die or have negative consequences or side effects. Yeah, I don't see why not. It sounds interesting. I'm 16 and I have a Roth IRA. Should I use that Roth to pull out 10K of income tax free for my first property? I mean, I would. Yeah. If I in that, as me, not as financial advice for you, but yeah, as me, if I were in those shoes, I would love to buy a property as soon as possible. And if I had money that enabled me to do that, especially if it was a below market value deal and I got a wedge, even if I got like a $40,000 wedge, I mean, come on, you're just it's gonna skyrocket your net worth. It's awesome. How is a Neuralink any different than doing drugs? Huh. Well, yeah, that's very interesting. I mean, really, from the Neuralink experiments that we've seen, the Neuralink right now was implanted in for example, some animals, was a way of tracking their thoughts and what their activity was like. I don't know if they've done any manipulation to they had that pig video. I can't remember if they did any manipulation to the pigs. But I imagine the Neuralink has very good opportunities in the future, or will in the future have opportunities to cure certain issues. Yeah, they have that Neuralink brain activity video where they just sort of track the brain activity of the pigs. But I'm sure at some point in the future, you could probably cure some permanent and debilitating illnesses, whether it's migraines or whatever, with the Neuralink that you couldn't do well without massive side effects with drugs. Okay, so I think there's a chance that Elon and Tesla could be forced to adopt LiDAR. Yeah, I do think there's a chance of that. All right, we answered those. I've gone through most of these questions. I have most of my money in a 401k, but 7K in available cash. Can't buy real estate right now. Better to put in M1. So, I mean, my question always is, why can't you buy real estate right now? I think a lot of people resign to, oh, well, I just can't buy real estate right now. Yeah, and the question really is, why? and what can you do to make it so that you can? Oh, that's interesting to me. Let reported Q3 final stages of getting FDA approval and will be listing the SOC as a medical device. I think that's great. Yeah, and that's why it went up, right? That's what I love about I expected that something like that would happen. Do you plan on releasing a course on how to get a girlfriend, boyfriend? I would not be the person to ask for that. Yeah. So I don't have a lot of experience in that. Of one. So, all right. Any other questions? Let's see here. If you could only own one for the next 10 years, real estate, crypto, or stocks, which would be and why? Yeah, I mean, I don't really like answering that question because I feel like that's just trying to license somebody's rationale or try to justify somebody being all in on something, which I think is a mistake. I think there are inherent risks to all of them. If you're all in on real estate, I think you have a very safe, generally very safe wealth building career and path of relative low risk. And if you do a good job, substantially high returns, I think you can do very well with real estate. I think with crypto, you're extremely high risk. So these are very much the opposite. Real estate, very low risk, in my opinion, and crypto, very high risk. But the capacity for returns is potentially much higher in crypto, but also so are the possibilities of unlimited losses. Well, maybe not unlimited losses, but complete losses. And with stocks, you kind of have a mix of both. So you're really talking about three entirely different personalities when you're comparing real estate, crypto, and stocks. So I would never pick one of them. I mean, I do think that probably out of the three, stocks have the most potential for being balanced because I could pick stocks that are safer and stocks that are riskier. So it would give me a little bit more flexibility. Wish I'd bought the course sooner. I'm listening to advice on mistakes I've just made recently. Oh, well, I appreciate you saying that. Thanks so much for being here. Yeah, I mean, for the 1,000 people that snuck in here without being a course member, maybe you'd love to be part of these on a more daily basis, in which case you should go to metkevin.com/join or use that link down below and use that StockDoc coupon code and join the courses. All the courses come with access to this live stream that we do generally every day. The market is open. We did a special one here on Saturday, which I usually don't do. Anyway, sorry, I just got a text that's like, I don't even want to respond to. All right. Okay, any pointers? Okay, let's make this the last. Okay, will there be a Black Friday sale for the course? Yes, and it will not be less expensive than it is today. Promised. So if you buy it today, it will not be less than what it is today. And there might actually be a price increase between now and then. I'm not sure. We haven't quite figured that out yet. I'll probably know more on Monday. But I never want anybody to think that they bought one of my programs a month ago and then there was a better price a month later. Like, that would piss me off. And so I've always vowed that the price of the course just goes up. And it's really just to honor the people who joined earlier. But anyway, yes, I would recommend getting into real estate in any market. Doesn't matter what market it is. Okay, so the last question that go to metkevin.com/join and you could see the stocks access one. That's the Stocks and Psychology of Money program. Just remember to put in the code StockDoc. Well, so there will be a Black Friday sale. It just won't be a lower price. It's not contradictory. It's not contradictory at all. There will be a Black Friday coupon, which will be a Black Friday branded sale, but it won't be a lower price than it is now. I don't know how more transparent I could be. Okay. So, Sens. Sens got some real momentum there, or had. No, Crypto, Luigi, you're probably not supposed to be able to access this. All right, last question here. So, any pointers for buying a property jointly before getting married? Trying to use the cash for investing first. So, I highly recommend that everybody sign very reasonable prenups before they get married. You should determine before you get married that if somebody is going to pay spousal support, how many years they're going to be responsible for doing that. If one person acquires a substantial amount of wealth through their hard work, is that wealth above and beyond a certain point split 50-50 or 25-75, 20-80, 60-40? These are things that should be reasonably determined before a marriage. And I think that if you're going to buy property jointly, that should obviously be, if as long as you're both contributing 50-50 to the down payment, that should be a community property endeavor. And you should probably, I mean, not this isn't, title is the last thing I can advise you on because it's so legal, but a lot of people either take title as, well, I'm not even going to go down the title rabbit hole, but anyway. Any pointers for buying a property jointly before getting married? Well, that's my first pointer. The second pointer is get a good deal. It'll make life a lot easier. Probability of Jerome staying the Fed chair. That's a good question. I would probably say 75%. Thanks. So I've seen all the questions on GGPI. I'm not ignoring it. I just don't have an answer for you. So I have written it down though. And let's see if I can put something together here. Okay. So member chat, JM, thank you for joining the Stocks and Psychology Money Group. Watch lecture 1.0 to actually join these course member live streams. There's no member chat for that. It's just all the course members are in there. And then if you want to join member on YouTube, that's different. It's like $4.99 a month. You have to do it under, it's next to the subscribe button, but it doesn't show up on the iPhone or iPad. Okay, cool. All right, folks. Thank you so much. Appreciate you being here. We'll see you in the next one. Thanks.